This conference will now be
Okay.
Professor Boyd.
Yes.
In my group, I have me as the continuing student and 3 new students. So I
Mm,
added Angela to my group, so we would have, that would make us 5. Is that okay?
that's fine.
Okay.
The couple will be at 5. So, I just need probably each, because sometime it was there and you see we can have some changes. So what I need is for each team to send me an email with the members of the team, and then I will assign numbers. If you all didn't do that, then I will assign the numbers, and I'll get those numbers to you. That each team will.
What numbers?
Team 1, team 2, team 3, team 4, team.
Oh,
Got it? Okay. Last time we talked about the fact that there are a lot of companies that committed fraud, and they had auditors, but because the auditors paid the company, sometimes they would not always appropriately lay out the fraud that was occurring. And so I had you all look at that so you would realize a lot of companies, these are the companies that were caught. So it does not necessarily represent all the companies. So off that mic, traveling, making a lot of noise. Thank you. What we discovered was in each case, a lot of time there was an attempt to increase the revenue. Cash wasn't going up, but the revenue. Wait, somebody, who is this making all of this noise? Okay, so just mute and then unmute when you're ready to talk, so we don't get the backdrop. So they had a statement of cash flow, but most people have not been introduced to the statement, or they take it a little bit lightly, and they attempted to rely on the income statement and balance sheet, which can be manipulated pretty easily. And so we have what's called a statement of cash flow, and it shows cash flows on operations, from investing, and from financing activities. As we said before, the purpose of a company, if it starts off with cash, its earnings should increase, which we talk about. Yeah, the income should go up, but the cash has to go up too. And so if a company has earnings but no cash, then then something is amiss in a situation like that. So the purpose of the statement of cash flow is to help us to make sure a firm is going to be illiquid, that it's going to be solvent. And we're looking at the changes in all the items, but we're looking at it in terms of cash and the impact of cash. And so the statement does a lot of things. And so 1 week from today, everybody in the class is going to pick a firm that they want to work for. They're going to make a major purchase from it. You're going to do a cash flow report on that company to see if you would invest $1 million with that company. Now, as we said, there are 3 components of a cash flow statement. Operations. This is like your salary. Investing. This is where you're buying assets and you don't want cash from here. You should be expanding. And then financing, this is where you're borrowing. And what we like to see in a good company is that its operating activities are generating enough cash so it can expand. So if it had $1 million here, it could expand, spend $200,000 or $300,000, pay off some indebtedness, and still had cash left over. It's just like you. If you have a salary so that you can buy additional assets, house, cars, clothes, as opposed to sell the assets that you have, and if you can pay off your student loans, then you're doing well. And so we're trying to see the same thing with a company. Does it have operating income, which equates to your salary, so that it can continue to expand and so that it can pay off its indebtedness? So part 1, operations, the cash provided from operation. This has to be positive if the company's if the company is be doing well. If this is not positive, then there's something wrong with the company and you don't want to invest in it. So that's the first thing you look at. You're going to be suspect if cash is coming from investments because it's selling its stores. It's selling its plant and equipment. It's just like you selling your car. You're not going to have much in the operations if you can't get to work, your salary. And then financing, which is how you finance the business. That's fine. And cash can come from there, but eventually you want to be paying dividends and you want this to be negative also. So we want operations to be positive. We want investments to be negative. We want financing to be negative. And yet the change in cash flow to be positive. So in a good company, we might want to see, let's just say, $1 million here. That is, that company generated $1 million in cash from its operations. It expanded, and so this number was negative. If a company doesn't expand, it contracts. Then we wanted to pay off indebtedness and pay dividends and still have cash left over. So when you're looking at your company and you would do this over a 3-year period, you try to see if it had a pattern. I just gave you some numbers here to look at. It depends on the size of your company. But this is how you evaluate a company, as opposed to just looking at the income statement. We got it? Any question on what you're going to be doing on that cash flow report? You get a publicly traded company that has cash flows available, and you look at it and tell me whether you make $1 million, whether you would invest $1 million in it or not, based on the cash flow statements, okay? So you got an example in Blackboard on how to do that. Let's look at how we're going to derive a cash flow statement. And we derived it before when we just had a few cash transactions by looking at the cash transactions. But we can't do that anymore if we got 1,000 transactions. And so what we're going to go is look at the accounting equation assets equal liabilities plus owner's equity. Then we're going to say assets equal liabilities plus common stock plus retained earnings. Everybody should be familiar with that. Cash plus the other assets equal liabilities plus common stock plus retained earnings. We're going to break it down further. Cash equals the liabilities plus the common stock plus retained earnings minus the other assets. So we just move the other assets to the other side so that we can look at everything in terms of cash, how did cash change in regard to everything else? And breaking this down a little bit further, cash equals the current liabilities plus the long-term liabilities plus the common stock plus the retained earnings minus the current assets minus the long-term assets. And finally, cash equals the current liabilities plus the long-term liabilities plus the common stock plus the net income minus dividends, that is retained earnings, minus the current assets, minus the long-term assets, plus contra assets. So the change in cash then equals the change in everything else. So we go through and use this deriving of the change in cash formula so that we can come up with a way that we don't have to look at every cash transaction. So the change in cash equals the change in everything else. Now we're going to look at the location of where we're going to put the changes. Current liability changes are always going to be in part 1. Long-term liabilities are always going to be in part 3. Common stock's going to be in part 3. Net income's going to be in part 1. Dividends in part 3. Current assets in part 1. Long-term assets in part 2. Contra assets in part 1. So we're just talking about operations, investments, and financing. So what we're saying is when we get our changes, any change in cash is forward. That's what we're looking for. If it's a current liability, the location is going to be in part 1 operations. Long-term liability, part 3 financing. Common stock, part 3 financing. Net income is going to be in part 1. Dividends are going to be in part 3. Current assets going to be in part 1. Long-term assets going to be in part 2. Investments and contra accounts are going to typically be in part 1. So that just shows what the changes are going to be. Now, the other thing we have to look at is whether the liability went up or down. So let's look at the current liability. If you get a student loan, what happened to your cash? If you get a student loan, what happened to your cash? It goes up, it becomes a source of cash. So your cash account goes up. So when the current liability goes up, it's a source. When it goes down, it's a use. When it goes down, it's a use. It's in part 1. Long-term liability is going to be in part 3, and they work the same way. If you borrow money, long-term, it's a source. If you pay it all, it's a use of cash. Common stock, it's going to be in part 3. If it goes up, it's a source. If it goes down, it's a use. Net income, if you have net income, it's a source of cash. If you have a loss, it's going to be a use. It's going to be on the use side. It's in part 1. That's where this is like salary. This is where the income is supposed to come from. Dividends are always going to be in part 3, and they're going to be a use. So that's where you're paying the owners back. Current assets are going to be in part 1. If the current asset decreases, it's a source. If it increases, it's a use. Let's look at inventory. When you buy inventory, your cash is going down eventually because you got to pay for it. Inventory only provides cash when it's sold. So when you buy the inventory, it's going up, but it's a use of cash. You're happy when you sell it. Long-term assets are going to be the same way. When they decrease their source, but you got to be careful selling your car. When they increase, they can have the use, but you need them. Part two, contra assets in part one, and typically they're source. So I just got this little chart to show you where everything goes. So let's look at the steps in completing the statement of cash flow. You calculate the change in cash. Then we're going to calculate the change in each balance sheet account. The change in retained earnings is reflected on the statement by the net income and dividend. Based on the chart above, place the change in the appropriate section of the statement of cash flow as an increase or a decrease. The net change in sections 1, 2, and 3 when combined equals the change in cash listed in cash flow. So to make your work easy, I created this template. And I got everything where it needs to go. When there's a cash flow from operations, it was net income, it's on the source side. If it's a loss, it's on the use side. If current asset decreases, use increases, source. Current liabilities, if they increase their source, if they decreases the use. We're going to add up all of our sources, all of our uses, take the difference, and that's the net change. If the sources exceed the uses, then you had an increase. If the uses exceed the sources, you have a decrease. And if we have a decrease here over a period of time, then you don't need to go any further. This company is not worth investing in. It does not have income from operations. We have a couple of other items we put in operation. There's a loss on the sale of an asset, you get cash from that, or it's a gain on the sale of an asset. We take the loss and gain out because the loss and gain on the sale of long-term assets, the cash, is a one-time thing, and that comes out here in part two. That's non-operations. Just like you got cash from selling your car. That's not like cash from a salary. So we're going to show that in part two to show that you're getting rid of investments. So if you have proceeds from the sale of a long-term asset, it comes here. If you purchase a long-term asset, it comes here. And what we like to see is a negative investment. That is, you're expanding, not you selling your assets. Then we have cash flow from financing.
Hey, Professor.
Yes.
So this chart is basically a more in detail version of that last chart you were going over, basically?
Correct.
Okay.
So issue of stock, purchase of stock, receipt of a long-term loan, repayment of a long-term loan, payment of dividend. It's showing where everything is going to go to get to the change of cash flow from financial statements. So if you can follow, fill these in, then it's going to get back to these changes here, telling us what the changes were for our company. So we got 10,000 checks. We can't go through and analyze the checks. So we use kind of an indirect approach to come up with a statement of cash flow. And so what you're going to have to do next time, each team will have to do a homework problem based on their number where they do a statement of cash flow from the income statement and the balance sheet. That's all you have, and you're going to prepare a statement of cash flow. Now, since this is just so much information to deal with, and you might say I might not, I may just have to take my money. I'm not going to learn all of this. So what I said was this. Let me make this 16 and above. I'm gonna put, and I'll put it italics here. I'm gonna put a 1 here. When you get ready to do a statement of cash flow, the first thing you do, you go to the balance sheet and you get the change in cash. You got it? That's the first thing you do. The second thing you're going to do is you're going to come to the income statement. I'm going to italics it, I'm going to bold it, italics it, make it a 16. So you're going to come to the income statement, and this is going to be the second thing you're going to do. So you got two things done. The third thing you're going to do is to pick up your depreciation. You can get it two places, change in depreciation. A lot of time we've got it listed on the income statement. So bold it, italics it, make it a 16. And so this is the third thing you're going to do to prepare your statement of cash flow. And the fourth thing you're going to do is you're going to go and look at the change in retained earnings, and you're going to come up with your dividends. So bold, 16, italics. The fourth thing you're going to do is put your dividends in. And that way you got some credit on the problem. You hadn't just freaked out and you couldn't do nothing. Okay. So let's go up here and see if we can complete the statement of cash flow on this template for this set of financial based on what I showed you. So what's the first thing you're gonna do?
Go to the balance sheet and get the statement.
Balance sheet, changing cash.
Go to the change in cash. How much was the change in cash? How much was changing cash? What?
100,000.
You start with 100 and you end up with 100. Changing cash is 0. So you started with 100,000, ended with 100,000. So your changing cash is 0. That's the first thing you're trying to do with a statement of cash flow. So you got one thing done. Now we can scratch cash out. We got that done. Second thing I told you to do is to do what?
Go to the income statement.
And you got what? A loss. So what you gonna do? Go ahead and put it right here. So you got two things down. You got two things done. The third thing you're gonna do is go to what? Depreciation. How much is depreciation? 25,000. Notice that that's the same as it here, in terms we can get it from two places. I'm gonna strike that out. Got that account taken care of.
Hey, Professor Boyd.
Yes.
I noticed that on one of your for the depreciation, one of them was minus 25,000 and one just said 25,000. Was it just the way that you formatted it to have a minus?
Could have, yeah, that format on one. Sometimes, this is probably a better format because you're gonna add them up. Let's do it this way. Okay.
Got it.
So we now have how many numbers on here? 1, 2, 3. And we need one more number, right?
Right.
What number is that?
The retained earnings.
You're right.
We need the dividend number. We need how much dividend gonna be. How much of a dividend did this company pay? See if you can do me a statement of retained earnings and determine how much of a dividend this company paid. Can you do a statement of retained earnings?
Yeah, you can.
Go ahead, then. Okay, so we were doing the retained earnings. We know that the beginning retained earning was how much? 300,000.
300,000.
Put 300,000 down. 300 down. Then, since we had a loss, it's going to be less. Okay. Move this over some. Since you had a loss, we're gonna have to subtract that, and that loss is how much?
100,000.
So we're gonna have minus 75,000 for the loss. Next, the dividend is what we're trying to find. Then we got the ending retained earnings. Based on this, that was what? 200,000, right? But what the dividends have to be? The beginning retained earnings is 300. You had a loss of 75.
25.
Had to be 25,000. So most times, you'll be expected to calculate the dividend.
Wait, can you say where you took off the 75 from?
That's the loss. Remember the statement of earnings, beginning retained earnings plus the income or less the loss. You're gonna have both. Less dividends give you ending retained earnings. We knew all of these numbers except the dividend. So having done that, come through here. That way. So our job is to analyze every account on this balance sheet. So we got the dividends done. And we just put it right here, 25,000. So we've got 4 things done. And so if you can structure yourself to go through these 4 things. Now, you could go through it straight, but for most people, it's good to do these things, so you get some things down. Okay.
Professor, what was the how do we calculate the dividend again? What was the equation to calculate the dividends?
We use the statement of retained earnings formula. Beginning retained earnings plus income less a loss less the dividends equals ending retained earnings. So you just come in and plug number that's going to get you to 200. 300, 200. Okay. Statement of retained earnings. We're going to go to account receivable next. What kind of asset is account receivable?
Receivables.
Short term?
Is it what?
Short term, shirt.
Is it a current asset or a long-term asset?
The current asset.
So where is it going to go on the statement? 1, 2, or 3? What? Operations part 1. The receivables did what? They went down. Are they going to be a source or a use?
No, they're source.
They're going to be a source because they went down. When the asset goes down, it's the source. So we should be able to come up here to put the 25,000 in here. Now we got account receivable taken care of. Subtract them out as I use. Now we're going to inventory. What did inventory do? What type of asset is it? Current asset. What did it do? What part of the statement is it going in?
Yes.
Part 1, operations. Is it a source or a use?
It's a source.
Is it what? Went up. When you buy anything, your cash goes down. And remember, for those of you who had, Kmart? Remember when they bought all that inventory and they had issues with their cash flows? See, buying inventory is not the important thing. Selling it is. So that's 150,000. So we're gonna go up here, put inventory right here, INV, and we're gonna put that on the use side. And what do we have next? Let's go down here and get our account payable. So we'll jump around a little bit. What did account payable do?
Decrease.
It decreased. What part is it going in? Part 1, 2, or 3? It's going to be in part 1 because it's a current liability. And since it decreases, it's going to be what? It's going to be a use. I guess actually. Okay. Let's go and take care of the long-term bond payable. What does the long-term bond payable do?
Increase.
Increase. So what is that telling you? What part of the statement is it going to go in?
Source.
It's a source of cash. What part? The long-term liability. So it's going to go in the part 3. 3, okay. So this is similar to you getting a bunch of student loans. Okay. That's fine, but you know eventually what? You are going to have to pay it back. So those are the, so we want to know if a company has a lot of money through borrowing, because they got to pay it back at some point. Okay, so we've taken care of, let's go on to common stock. So what did common stock do?
Increase.
Increase. What part of the statement is it going to go in?
Source.
It's a source.
Part 3.
Part 3, it's an investment, not operation. So we have a $50,000 increase that we'll put in here. Okay, so we're taking care of retained earnings, common stock, long-term bond, accounts payable. Now we got to go back up here and you got the depreciation. We got to look at the equipment and the investment in IBM stock. So what did the equipment do?
Increase.
It increased. And what kind of asset is equipment? It's a what? The long-term asset, correct? So it's going to go in part 2. So we bought equipment. That's fine. So we bought $300,000 worth of equipment. Okay, so we have everything taken care of just about, right? So we got this investment in IBM stock. Okay. So there was a gain on the sale of the IBM stock for $25,000. So we did have to get some cash, but the chart tells us, right now this is in operations. So actually, the loss of operation was really 100,000. This kind of reduced it, but we're gonna get it back to 100,000. So we're gonna go up here and took that gain on the sale of the long-term asset and put it back on the use side. Because things were really worse than they look from operations, because this is not a recurring thing. Now, the equipment evidently cost $50,000, okay? And there's a gain of $25,000. So, how much money did I make on the IBM stock? How much cash did I get?
$25,000.
How much?
25,000.
If you bought something for $50 and stole it to me for 75, how much money would you want from me? You want 25,000?
Wait, hold up. You said, hold on. Repeat what you said.
Yes, you made 25. If you sold,
So it was 50,000 is what the cost was, but there was a gain of 25. So how much
Right.
cash did you get?
75.
75.
Right, because you're going to get back not only your cost, but the gain that you made. So we put this in, in this example, so we can, you can have an example that has everything in it. So cash proceeds from the sale of long-term asset, 75,000. So you see, this is that statement that was kind of, you have to think differently to do it. So a lot of accounting and finance majors just did not learn how to do it. They didn't think they would need it. But it turned out that they needed it, as you saw when you were looking at those companies. So let's see what our cash from operations was. We add up all of the sources in operation. We had 25 and 25. So that's 50,000. Does everyone see that? All we did was add up 25, 25, 50,000. Then we're going to add up all the uses. So if I add up 75, 150, 25, and 25, how much is this going to be?
250.
75, 150, 25, then another 25. How much is that?
275,000.
Okay, 270. So we're going to, our uses exceed our sources. So right away, we look at this company and it has a negative cash flow from operation. So right away, you know something wrong. That's all that's all people had to be able to do. So if you look at a company, this is negative, you know there's a problem. So then we go down here to the investments part. 75,000 source, $300,000 use. So they bought equipment. Part of it came from selling the IBM stock. So 225,000. So this is -2. So we don't mind this being negative. But we need some positive money up here. That's right. Okay. Let's look at this next section. They got how much money from the loan and issue of the stock, like 500,000. They paid a dividend of how much?
25,000.
So most of their money came from where?
Bonds.
The bond pay?
Borrowing. Did we miss something here? 225. So we add all these up, how do we come out? The accounts payable, the change was 50,000. What do we have up here for accounts payable? This should have been 50,000 here. So if this is 50,000, this is going to be what, 300,000 here? And so this would be 250. Yes, I think that's good. So I put 25,000, should have 50,000 here for accounts payable. So a minus 250 and a minus 225 equals what? Minus 475. Got a plus 75, so you come back to your zero. So you should be able to add these up and come back to your change in cash. So that's how we do a change in cash indirectly, not looking at all of the cash transactions. Any questions? Any comments?
So if their changing cash wasn't zero and it was a different number, your difference at the end should add up to that number. Well,
That's correct.
okay.
Let me see if I can get my teams laid out here. Okay. So Tara, what was your team number?
Group 3, I think it was.
Okay, 3. And somebody
I'm
else
gonna
had. Okay, Terrell group is group 3. Somebody else sent me a number and it doesn't matter.
Yeah, we're group 3.
Okay.
I was still looking for a group, Professor Boyd.
Who's this?
Tyron.
Tyron Sebastian. Okay. And how many people are in your group?
You talking about my group? Yeah, it's 5 of us now.
Let's see. So he's got 5 people in his group, group 3, and they're team number 3. Joanna? Joanna there? Okay, Belle?
Did you say my name?
Yeah?
Oh, I'm here.
What's your team number?
I didn't know we were assigned numbers already. I can tell you who's in my group.
But you don't have, how many people in your group?
5.
I'm gonna make you team 4.
Okay.
Next. Belle, are you in that group? Okay. Next group.
You just want us to tell you?
Yeah, I just need, okay, Brady. Y'all don't have a number, do you? Right?
Group 5.
Your group what?
5.
Okay, Brady is group 5. How many people in your group?
I think it's 4. It's 4 of us all together.
So y'all are group 5. So we got 3, 4, and 5. Next group up.
I'm group 7.
Hancock. You're group 7. How many people in your group?
I have 4 people in my group.
Okay. Next group, Powell.
Group 2.
Oh, couldn't hear you. Let me get somebody else in that group. Clifton. Anybody else in Powell's group? Sometimes she has trouble with the microphone.
Two.
Okay, Kiara.
Can you hear me?
I can hear you now. How many people in your group?
5.
Did you have a group number?
No.
I would make you all group 6. So I have a group 7, 6, 5, 3, and 4. So I need a 1 and I need a 2.
Tanisha is in group 2.
Nisha Ellis. How many people in your group?
4 total.
4. Need a group 1. Any groups left?
Where are we getting our problems from?
Okay. Are there any problems in the handout that I sent to you on statement of cash flow?
You said I didn't know you sent out problems.
That's why I'm asking you.
I didn't get any problems. I don't know.
Okay.